Technical analysis. The term technical analysis might sound a little, well, technical, but it's actually pretty simple. Essentially, it's a strategy an investor may use to examine an investment's chart and attempt to forecast its future performance. Some crypto investors may use technical analysis to attempt to identify when to enter or exit a crypto position. When performing technical analysis, investors can use a variety of techniques and tools to analyze a chart. In this video, we'll focus on some technical analysis techniques, which includes number 1, support and resistance. Number 2, trends. Let's start with the first technique. Support and resistance are price levels that the crypto has had trouble breaking through. The ability to properly draw support and resistance levels is one of the most basic skills every price action trader must have. It's also the building block for everything that comes after it. How to draw support and resistance levels. Go to tradingview.com. Click the chart over here. Click the box over here to search for your preferable cryptocurrencies. Click on your selected cryptocurrencies. Now you should have your chart available. The first thing I want to mention about support and resistance levels is that they aren't always exact levels. In fact, most often these levels are better thought of as areas on your chart. Here on the chart, we can draw our resistance over here because the price couldn't break above. Think of resistance as a ceiling. The zone here can be regarded as our support zone. Think of support as a floor zone. You can see that price couldn't break below. If a crypto coin breaks through support or resistance, it could be a signal to enter or exit. The second technical analysis technique is trends. The trend is the general direction a crypto price is moving. There are 3 kinds of trends. Number 1, uptrends. Number 2, downtrends. Number 3, sideways. An uptrend occurs when the price is creating a series of higher highs and higher lows. Higher highs are abbreviated as HH. Higher lows are abbreviated as HL. At this point, we can say the market structure is bullish. Why? Because the market is creating a series of higher highs and higher lows. A downtrend occurs when the price is creating a series of lower highs and lower lows. Lower highs are abbreviated as LH. Lower lows are abbreviated as LL. At this point, we can say the market structure is bearish. Why? Because the market is creating a series of lower highs and lower lows. The sideways trend occurs when the price is ranging within a support and resistance level. You should be very careful in a sideways market. Always wait for a clear break of the resistance zone before entering a long or buy position. Same way, always wait for a clear break of the support zone before entering a short or sell position.